right, guys, welcome back. It is time now for your Sunday Money. And today for our segment, we've got some viewer mail. A viewer wrote, our grandson is a freshman at UT and he wants to invest in the stock market. Should I be concerned? A very interesting question, one I'm interested in. We've got our Money Man Paul Fain, president of Asset Planning Corporation, here to answer that question with his thoughts. Paul, thanks for being here.
Sure.
Interesting question. What's going on?
Yeah. So, as a parent, as a grandparent, I get it. Something new, often scary. So a grandparent's worried that, their grandchild might start investing and lose money, or that they really don't know what they're doing, or, maybe even be concerned about getting scammed or caught in some type of fraud.
Makes sense. Yeah, no, I can imagine so. And to me, it doesn't sound like there's really any inappropriate age here. I mean, you could teach some lessons, right?
I think you're absolutely correct. The earlier you start learning about, good spending habits, savings, then investing, and it starts with just learning what's the difference between a stock and a bond and a money fund, or an individual stock versus a stock mutual fund, and learning the importance of long-term investing, having that long-term perspective where you get the power of compounding working for you.
And I think it would be surprising. Do you think that most young people actually end up making good investors?
Well, you and I talk off to the side often, and I'm thrilled that you're digging into the investment world. So I say this with all due respect.
Yeah.
Young people in general, think a high schooler or a young teen in college tend to be a little overconfident, very enthusiastic. There tends to be a little bit of impatience, Sean.
Yeah.
I mean, just that desire to make money, make quickly, have a lot of success. So it leads to some more speculative mindset, and maybe being a little more susceptible to the hot tip. We've seen that with things like Bitcoin and marijuana stocks and things like that. I think young people have to experience success and failure on their own. That's probably the greatest lesson.
Yeah, well, and that kind of leads into the next question. What do you think about advice for maybe a beginner, maybe not being so speculative?
Yeah, well, and while you're in the process of learning, and this is completely boring, look into a stock index fund like the S&P 500 fund, Vanguard, Fidelity, Schwab, all these places, brokerage firms have one. They're diversified. They're low cost. They have low minimums. In other words, and don't hold me exactly to this, check with each. Perhaps for $50 or $100 a month on a regular automatic contribution basis, you can buy, a piece of 500 of the biggest companies in the U.S. and experience that long-term growth.
Well, yeah, and it's good. I know for me, specifically, it's diversification. You want to have pieces of a lot of things.
Right. And the fewer pieces that you have, the fewer stocks that you have, the more speculative the investment is.
Gotcha. Okay, all right. Fast market fact. I love that music, by the way. I don't know.
It is catchy.
I love it.
Good job, guys.
So fast market fact, Paul, what you got for us?
Well, I thought it would be important to understand that as investors, particularly younger investors, we're interested in the story, whether it's Facebook, we mentioned marijuana stocks, or Amazon or Apple. When you own a piece of the S&P 500 index fund, you're participating in some of the most exciting companies in America. So you still can track those companies and see how they're doing. The top 10 holdings in the S&P include Apple, Amazon, Facebook, Johnson & Johnson, a drug company, Mr. Buffett's Berkshire Hathaway's number 6, number 10's Procter & Gamble, makes a lot of consumer products. So you can still track individual stories. These are 25% of the index, so they're going to impact your money. You still experience some of the learning that goes on with individual stocks, but do it in a mutual fund setting.
Very cool. Awesome, Paul. Thank you so much. If you have a question for our Money Man Paul Fain, you can email him. Email address is paul@assetplanningcorp.com.